Alan Rowell from the accounting place, back with everything we need to know to file our taxes this year. Good morning. Good to see you, Alan.
How you doing today, Bob?
Good. So just before the break, we are visiting the beautiful Fern Resort, and that got me to thinking that last time you joined us, we ran out of time to talk about that staycation tax credit in Ontario. So how does it work?
Well, you're right. We did run out of time, and this worked out perfectly
Yeah.
because the staycation tax credit is actually Ontario's way to help the hospitality industry for the 2022 year. Now, that's important. It's not for last year; it's for this year coming up. So make your plans now. What the Ontario government is going to do is they're going to give an individual back 20% of their hospitality costs or their hotel resort costs back as a refundable tax credit up to $1,000. So what that means in dollars and cents is if you go to Fern Resort, for example, you spend $1,000 on the accommodations, the Ontario government's going to give you back 200 of it. For a family, that becomes 400, a maximum of $2,000. So, we look at the weather yesterday. Hey, man, I don't know about you, but I'm ready to travel. And,
Oh,
400
yeah.
bucks in my pocket, what the heck?
Absolutely, and it's a much-needed boost for the sector, which was just hammered by the pandemic.
Oh, absolutely.
Yeah. Hey, let's talk about medical expenses. They always seem to be a question on how to claim them, and let's talk about how much of a difference it can make.
Well, the part of the thing with medical expenses is understanding how they work. We get the question, probably daily is, I got some medical expenses. I don't know if they do any good because we tend to spend the money and then we forget about it. We go to the dentist last March. We get, prescriptions. We save all those little tiny slips at at $6 a piece or something like that. And the question really does come down to, do they do any good? So the way it works is medical expenses in general are subject to what I'm going to call a 3% deductible. What that means is that the taxpayer, the individual, is going to pay the first 3% of their medical expenses based on their net income. Now, what that means is if we look at an example, and let's say that we have a net income of $40,000 and we have medical expenses of $2,000, what that means is 3% of the 40,000, so $1,200 becomes that deductible amount. That leaves $800 from the $2,000 total bill that becomes the medical tax credit, and that comes off of there. The beauty about the medical expenses is that the family can be grouped together. So if the spouse in this case only had an income of $30,000 in net income, that means their deductible would become $900. So that same claim now, depending on which spouse it was claimed on, can be increased by roughly $300.
Okay. Now, medical expenses can lead to many other tax credits, such as the disability tax credit. What other related credits are there?
The disability tax credit, and I think I've said this before, as far as I'm concerned, is badly named. We all have an opinion of what we think a disability is, and we have the Paralympics on now. We're looking at all these different things. It's really a restricted quality of life credit. And I think if we look at it that way, it becomes more understandable as to what that credit is. So I think people should look at their doctors or talk to their doctor and see if that works. When we start to spin off from that, there's a number of different things that become available that are things that we wouldn't consider medical expenses. For example, people 65 years in age and over, can qualify for what's called a home accessibility tax credit. Now, this is a credit up to $10,000 to allow them to modify, renovate their home in order to make it more mobile friendly or more available for them with their disability tax credit and stay in their house longer. Nobody wants to go to a retirement home, that type of thing, if we can stay in our house. We have attendant care expenses. So, if people that are bringing in nurses on a daily basis or a weekly basis and that type of thing, those expenses are all deductible. And they all kind of tie back to that disability tax credit.
Right.
There's a refundable expense supplement that's available. So lower income. If your income is below $28,000 and you have some medical expenses and you're working, you have employment income, the government will actually reimburse you some of those medical expenses rather than just a non-refundable tax credit.
Okay,
So
I wish we had more
come back-
time, Alan. You know, we always run out of time because there's so much great information, but we'll link up the accounting place at chh.com, and we're going to be seeing lots more of you before the tax deadline.
Absolutely. You guys have a great day.
You too. Thanks, Alan.